Matt Picheny, welcome to The Real Build. How you doing today, sir?
Bill, thanks for having me, and I'm doing really good.
Awesome, man. I'm excited to have you on. You and I were just talking before the show. I've had quite a few real estate investors on. Everybody's a little bit different. Everybody has kind of a different mindset, different strategy, and so on. Today, we're going to get into how we can help today's investor. But before we get started, let's talk about you. So, who is Matt Picheny?
Well, I guess first I would say I'm a father. Then I would say that I'm a husband, and then I might say that I'm a real estate investor. Right? So I invest in real estate apartments across the United States. As I said, apartments, mainly multifamily. Although I've done some new construction, I've done some land development, so I'm definitely open to some other things. And once in a while, my wife and I will join forces and produce Broadway shows, which is a whole other tangent we could briefly talk about at some point if you want. But my main thing, my main focus is real estate.
I saw that in your background about the Broadway shows too. Touch on that a little bit too, because that's pretty cool. Not many people can say they do that. So let's go into your background on that a little bit too. Then we'll dive into some real estate.
Yeah, sure, Bill. Well, I moved to New York City in 1992 to pursue a career in theater, and I was actually a professional actor for 5 years. But yeah, I went to a musical theater conservatory, graduated from that, professional actor for 5 years. I was in 15 different productions all across the United States. I ended up getting involved in digital marketing and doing coding of websites in between acting gigs instead of waiting tables at the Hard Rock Cafe. I ended up starting my own company doing website development. 2001 came along, the dot-com bubble burst, and my company that I had, this boutique shop doing digital marketing things, basically imploded, right? Because everybody was going out of business. And at that time, I was told by my landlord that I had 90 days to get out of the apartment that I was living in. So I wanted to stay in New York. I wanted to live somewhere, but how did I find a place to live without a job and with a business that's completely failed? I ended up going in-house to a client of mine, Showtime, the cable television channel. They offered me a position, so I went there and I found an apartment. But instead of renting, I actually bought something way, way, way further away from where I wanted to live, way, way, way uptown. But I ended up selling it about 2.5 years later. And I saw my initial investment in that real estate more than quadruple in value. And so that was like a huge light bulb moment for me. That's when I started getting involved in real estate. And so as I was having this career in digital marketing and sort of working at a bunch of different advertising agencies, I had an 18-year career in digital marketing. I also did real estate as a hobby. And then about 7 years ago is when I started doing real estate full time. Also, a little bit before that, about a year or two before that, I had met my wife. We got married, and my wife works in the theater full time, actually, on the business side of Broadway. So because of that, there's been opportunities for my wife, Erica, and I to be involved in some Broadway shows. It started off with us just investing. It's interesting if you know anything about real estate syndications. Most Broadway shows are actually structured like a real estate syndication. It's a syndication. So we started investing in deals, and then we started actually co-producing. We've co-produced a couple shows. We actually won a couple of Tony Awards for the stuff that we've done. So it's been really nice that, I had that passion. It's what I started off wanting to do. And now that I still do real estate, and that's my 9 to 5. Once in a while, I can collaborate with my wife and still be involved in theater in one aspect, which is kind of really nice and rewarding for me. It's something I'm passionate about and I care about deeply. So it's nice to be able to do that.
I love your background, and I know a lot of your background has kind of helped you with your success in real estate too. And obviously you're an author, you were a coder, you were an actor, and now you're a real estate investor, and all those little things that I shouldn't say little things, those major things that you did, have helped, you get to the position that you are today too. And I love seeing that, because with communication, with investing, and getting in front of people like you did as an actor, and then shows and so on too, and then the coding aspect of it, knowing the technology, knowing all these different things too, I'm sure has helped really ignite your real estate career.
Yeah, I think it has. And, starting a real estate career from nothing, right?
Yeah.
Really sort of starting from scratch and starting a business from scratch. It was really helpful to have had my own, boutique agency, right? I had already done a business once before, so kind of understood sort of how it works. And also was able to build my own website and be able to, with all the experience I had in digital marketing for 18 years, I know how to market myself, and sort of how to put systems together in place, and like what a CRM is and how that works. So it all those skills, I think, that I've learned along my life journey, if you will, really have come into play into the current iteration of me and who I am.
And one thing I got out of what you just said too, and a lot of people that they fail going into real estate, and I've heard this from past successful investors too, is that they treat their real estate investments as a business. It's a business. It's not just you're going to buy a house. It's not just going, and throw somebody in there as a rental or fix it up and flip it or whatever. You treat it as a business. You've also had your failures, which everybody has in business as well, too. So let's talk about, your first initial getting into real estate investing. Obviously, I'm sure you had your trial and errors. Everybody does. I want to hear about those. Let's talk about that a little bit.
Yeah, totally. I mean, you just said, hey, you treat real estate as a business. And, the thing is, I do now, but I didn't when I started, right?
Yeah.
So when I started, I was sort of following my nose. I wrote a whole book. It's called Backstage Guide to Real Estate, which tells that journey that I had from like knowing nothing about real estate and being an actor all the way to where I am now, right? And goes through all those different phases, because I do multifamily syndications now, but that's not where I started off. I started off with that primary residence that I was forced into finding because I needed a place to live, and then magically did well on it, and I did well on it because the market did well, but also without really realizing what I was doing a value add, right? I was improving the place. The place that I had moved into, the unit itself needed some work, which we did, but also the building itself just had really dated hallways and lobbies, and just it needed to be updated. And I actually joined, so it was a co-op building, and I actually joined a committee to actually do the renovations. And we hired an interior designer, and like we redid the lobby and the hallways, and like the place looked like a million times better than it had originally. And so that's what also really helped, increase that property value. But again, that was just kind of like by instinct. It wasn't like, oh, if I buy this property and we fix this up, then the value will increase, right? It wasn't that methodical. I didn't have like a pro forma right now. Today, if I'm doing a deal, I put it all in a spreadsheet and figure out my income and my expenses and what it would cost to do things and what that might do to increase my net operating income and thereby increase the value of the property, right? I didn't know any of that stuff back then. And it took me years and years to learn it. I think my biggest learning may have been shortly after I sold that apartment. So I sold that apartment, and I ended up buying another primary residence, but now in the part of town that I wanted to live in, the Upper West Side. And about a year after that, I bought a piece of raw land. And this was land in Connecticut, and it was in a lake community. Now, my property wasn't lakefront, but I had access to the lake. And a few years later, I ended up building a house there. And then that house, eventually, once the house was built, I rented it out. And again, it's a whole other long story. It's a whole chapter in the book. But by going through the process of having a piece of land that, almost an acre full of trees, and then, actually cutting down the trees, digging a hole, pouring a foundation, building a house, and realizing all the different things like, oh, you have to choose the cabinets and the floor and the paint color and the fixtures for the faucets. Like, I never realized I had to pick out, what do I want, 4-inch or 8-inch? And, I was all kinds of crazy stuff that I never thought about. And then once I was renting it, dealing with tenants, dealing with leasing agreements, and then dealing with all the accounting. Like, I never did that stuff before. I remember when I first started with that property, I had a spreadsheet. And then I was like, all right, eventually I was working with an accountant. She was like, all right, you know what, Matt, it's time to get QuickBooks. Like, you need to, you got to step up your game a little bit here now. The spreadsheets worked good for a couple of years, but we need to, so, and I learned about like depreciation. I didn't know what depreciation was. Like, there's so many different things that I learned in the process of that house, that vacation home, which was really it became a short-term rental. That was a huge learning curve for me, and it became very clear to me that I did a really poor job. If you want to talk about like failure, right? I did a poor job at investing to build a rental home. Now, my initial intention on this was that it was going to be a home that I was going to live in, like a vacation home for me. Mm-hmm. Once the place was almost completed, I met a woman who is now my wife, and it turned out we had other options for vacation type of, because her parents lived in Connecticut, and we could go to their house, and they're never there, and so it was a full-time rental ever since I rented it short-term because that was more lucrative, but it was always available for rent from the day we had the certificate of occupancy. But like, had I put a business plan together for that, I never would have built a home from scratch. Especially at that time, I would have done much better. Like hindsight, like bad idea to do that. Had I known what I know now, I could have bought, especially at that time, I probably could have bought like 5 or 6 single family homes, in another part of the country, and had really nice cash flow. This property, when I got to a point where I was pretty much breaking even, give or take a couple grand each year, just on a cash basis in terms of, income coming in, expenses going out. I also had some tax breaks. I had some appreciation in the property. But it really was not I wouldn't do it again knowing what I know now. But it was an amazing learning experience. I don't have a regret for doing it. I wouldn't be where I am today had it not been for that experience.
Yeah, and that's what I was getting at too, is just the trial and error, the failure, you went through that process. You would have never learned from it. You would have never, just like you just said, you're like, I could have bought 4 other properties for what I did with that home and the building experience too. But you learned. That's the thing. And it was a life lesson learned too. And one thing I wanted to talk about with you too is, I saw it on your website, is like how you talk about passive investing. What is it? It's just so the audience knows. And then I want to kind of get into that topic a little bit more too in today's day. Like, you and I were kind of briefly talking about before the show started. So let's go into the passive investing and what you're doing today through all this life experience that you've had.
Yeah. So I moved to Miami in 2015. My wife got actually, we were at the house in Connecticut, the vacation home. We were there for a weekend. It was never really relaxing for me because I was always fixing things at the house, but we were up there. And my wife, I remember Sunday morning, she was like, she had like this random email, and it was somebody reaching out to her about a job opportunity in Miami, Florida. And we were like, what? We're not moving to Miami, but But Erica was like, I feel like I should, take the call, like have a call with them. And I was like, yeah, of course, who knows what's going to lead to one thing or another. But like, obviously we weren't moving to Miami. We moved to Miami. So we moved to Miami in 2015. I mean, this is completely out of the blue, but an amazing opportunity for my wife. So we moved down there, and I actually thought when we first moved down there that I was going to work in digital marketing. Because remember, that's what I had been doing for 18 years. Mm-hmm. And so the thought was, oh, we'll move down there and I'll get a job at some agency down there. Well, while I was looking for a job, because I had no connections, I had a huge network in New York. I used to get recruited out of one agency into another, but in Miami, I didn't know anybody. And I started interviewing for some jobs. While that was happening, I had a lot of free time during the day. I started listening to audiobook. I was like, I should listen to audiobooks. Like, that's kind of a thing. And so I got Robert Kiyosaki's Rich Dad, Poor Dad, because I had heard of that title. And I was like, oh, yeah, I've heard this is a great book. I should listen to it. And in that book, Kiyosaki talks about creating these streams of passive income, right? And so, what that really is doing things that investing essentially in things, in businesses that generate cash flow to you that you really don't do anything for, right? So you set it and forget it, if you will. There used to be that infomercial, that set it and forget it thing. I forget what it was called, some sort of cooking device. But really that was the thing, right? You do a little bit of work up front to vet whatever this project is, make sure you feel comfortable with it, make sure you understand it, make sure that the people who are involved in the operations and the running of it are not crooks, because they could be. So you got to do due diligence. Like, it's not something to go into lightly, but if you can do those things well and vet these types of investments well, you can put money into it and have money coming to you. And I thought about where we were. Now, my wife and I, we had, so after the property that I bought, after I sold the house that was up in Washington Heights, I mentioned I lived on the Upper West Side, and then I did the house in Connecticut. Then I did this thing because Erica and I, Erica was pregnant. We were going to have our first kid, and we were living in a small one-bedroom apartment in Manhattan. We wanted more space. So we actually ended up moving to Brooklyn. Now, that's a whole other story on itself, but it's what's called today, they call it a house hack. I didn't know that it was kind of like a thing, but what I knew was I had stumbled upon a place to buy that actually had a rental unit, and I started doing the math on it. I'm like, oh, this makes sense. We didn't buy that. We ended up buying another one, but the place that we bought had a unit that we lived in and a unit that we rented. And the rental was actually paying more than half of what the mortgage payment was. So I knew from day one, I was like, this is great. And our unit was better. We renovated our unit, and our unit had a backyard. So I was like, hey, if we rent out our unit, we'll get more than what was getting upstairs, and upstairs would pay more than half. So we would have extra money. Like, we would have what I found out was called cash flow, right? So we already had that, because when we moved to Miami, we just rented the place in Brooklyn that we had. So we were getting positive cash flow from that. I thought maybe the Connecticut place at some point would be cash flow positive. But also we had invested in a Broadway show, right? We had done a couple. The first one did not do well. We lost a couple bucks on that one. But the second one was a little show called Hamilton. So we had money coming in from the show and money coming in from real estate. And I'm listening to Kiyosaki say, build passive streams of income. And by the way, since we had invested and saw the show Hamilton, loved it, I was listening to the Hamilton soundtrack all the time. And, one day after listening to Kiyosaki, I take a break, I put on the Hamilton soundtrack, and cast album actually, and they're singing the song My Shot. And it's all about Alexander Hamilton taking his shot. He needs to take a shot. He needs to go for it. And the cast is chanting, take a shot, take a shot. And I'm sitting here going, why am I trying to get a job in digital marketing, which I don't even love? I'm kind of burned out. I've been doing it for 18 years. Why don't I take my shot in real estate, which I've been doing as a hobby and been pretty successful in it. And that's when I made the transition to going into doing real estate full time. And my plan was to try to create as many passive streams of income as possible. So that if I had, a rental here and a rental there and all these different little businesses, and maybe I would expand out, maybe we would do some more Broadway shows, which we have done. And, what are ways for me to create tons of little businesses that can operate essentially on their own? And I'll talk about my real estate portfolio in a little bit to expand upon that, but that can essentially operate on their own, that send me checks, like little checks, like, hey, if I get $100 a month from this thing, but then I have 200 of them, all of a sudden it's a lot of money, right? So how do I over time build that? And that's what I decided that I wanted to do. And I told that to my wife, and I think she thought I was a little crazy, but she believes in me and was very supportive. And I've gotten to the point now where I've been able to develop all these streams of passive income. And so to talk a little bit about that, you mentioned in the introduction, I think you said that I have over 10,000, apartment units throughout the country. 2/3 of that are deals that I'm a passive investor in. So I am a limited partner. So what that means is I've been able to go ahead and vet the operator, make sure I feel really good about who's running the deal, the sponsor, the general partner, right? Those are all kind of the same names for the different names for the same thing. Make sure I'm comfortable with them. Make sure I'm comfortable with the deal itself, the market that the deal is in. Those are sort of the three deal pillars. I call them: the sponsor, the market, and the deal. That's how I vet everything. I actually have a free guide on my website that talks about how to vet a syndication, how to look at those 3 pillars. But I look at those 3 pillars, and if I feel comfortable, I'll go ahead and invest in it. Now, the other third of my portfolio, which is, almost 4,000 units, are deals that I actually manage, right? So I am the co-sponsor of those deals. I'm the asset manager on those deals. We have third-party property management dealing with the day-to-day. I'm not knocking on doors and collecting rent or anything like that, but I am overseeing that. And so that's sort of my active portion of the portfolio. But a lot of it is completely passive.
I was going to ask you too, and going into that a little bit deeper here, is the importance of surrounding yourself with the right people and resources to have success in real estate, because you brought that up of, obviously 10,000 apartments, somebody's got to manage them. You got to have a big trust factor. You brought up the money as well too. You can't have people stealing your money. How, as a real estate investor, and with having control of something like that, how do you keep control? How do you get the right people? What are you doing to be able to do all this? Because that's probably one of the questions the audience is asking right away. They're like, wow, 10,000 apartments. That's a lot. How do you manage it?
So lessons that I learned from the building of the house in Connecticut was about building that team and surrounding yourself with a council of experts. That's what I did. I mean, I didn't get, too into the weeds of that story, but I found that area and that property through a friend of mine, and her dad was a real estate broker, like an agent, and he knew people and he knew a contractor. And so I was able to build experts, a community of experts to help me in my quest to actually end up building the house. Right. And that's what I have continued to do in my business. So I have experts that I will turn to, such as my CPA. I actually have an interesting opportunity that might be coming up that I don't understand the tax implications of, because it's a really complex thing. I shot an email to my CPA yesterday. He's an expert at those kinds of things. I'm pretty good with the tax stuff, by the way, but this is a specific, unique situation, and he's my guy. I have attorneys. I have one in particular that I really like to work with, but I have a few different attorneys that I can turn to for different things. When it comes to, like you said, 10,000 units, like I mentioned before, over 7,000 of those are passive. So I literally don't do anything on those, right? What happens, I vet the person and I vet the deal. Like I talk about in that free download on my website, and then there's more detail on that in my book about how I do that. But I vet the person, the deal, the market. If I feel comfortable, I send them a check, and then it's like I don't even have to, like, if there was anything I even wanted to do, I really can't. Now I've built relationships with some of these sponsors, and once in a while I may have an opinion about something, and I will send them an email very politely, like, hey, by the way, you might want to think about X, Y, and Z. I don't want to step on your toes, but, because sometimes I can see things, but, for the most part, like 99.9% of the time, I never even say anything. Like, they know what they're doing. They're experts and they do their thing. And I get, hopefully, if the deal's going well, I get money, right? I would say I get checks in the mail, but I really don't. I get ACHs sent to my bank account. And so, I get passive income from that. And at the end of the year, I get a K-1 document, which is a tax document that usually shows a loss on paper, even though I've gotten money because of depreciation. So they work with expert CPAs and all of that kind of stuff, and they do their thing and I do my thing. And then we sell the property, and then that is a taxable event at that point. But that, there's very little that I have to do on those passive investments. I mean, I could do nothing. I like to know a little bit about it. So they send out usually monthly reports, sometimes quarterly reports. So I'll read those, but I could actually just delete them or, ignore them. The deal's still going to do what it's going to do. I'm just curious to know how they're performing. And I track the performance of them and things like that. Now, on the active side, I'm super busy with that, right? There's a lot of things that get involved. I've gotten to a point where I can't do it on my own. So I've hired people to work for me on these things. I have other general partners that I work with, and they have staff as well. We hire a third-party property management company to deal with that day-to-day, which allows me to, some people ask about vertical integration, meaning like, hey, Matt, you own all these units. Why don't you create your own property management company and run that? And it's something I've thought about. I haven't done it yet. I don't know that I ever will. I think I could. My background when I worked in the digital marketing stuff, I was a project manager. I'm a PMI certified project management professional, PMP, which means I'm really good at managing people and budgets and timelines. And I could build a property management company that I think would be phenomenal, quite honestly. The question is like, is that really where I want to focus my time and my effort? And, I think that it's a lower margin business, and I would rather spend my time, and where my passion really lies is sort of looking at the strategy and figuring out what we're going to do, how we're going to build or enhance and revitalize these communities and bring strong returns for our investors, right? That's what gets me up. It gets me excited when I get up in the morning, right? So I don't know that we'll ever will vertically integrate. I would rather let pay somebody good money to do that and let them deal with sort of the HR issues, having to make sure you have staff and that the staff is performing well, and all those kinds of things that are important but aren't exciting for me. So that's kind of where I'm at, but it's really about building that team around you, finding those experts in areas that you're not an expert to augment the team. And like I said, I was lucky that earlier on I had done a business before, and I had some skills that were very helpful as I was first starting to build my business, because at first it was just me and I didn't have money to pay for experts. When I first started my company, I had a little bit of money, okay, because I had this career in New York City, and I had saved up some capital, which I had to use to start my company and start investing in real estate. but I remember when I was first starting it up, I didn't have enough money, or maybe I had the money, but I didn't want to spend it on, I didn't feel comfortable spending a lot of money on the structure of the business.
Mm-hmm.
And I had to decide between hiring the CPA firm, which I've hired now, and they're great and phenomenal, but there was quite an expensive cost to start everything up with them and get everything aligned. And also I had an attorney that I was working with to sort of set up my entities and do the asset protection. And it was like, I really should have done both at the same time. But I had to choose. I went with the attorney who had done a lot of work with that CPA and kind of knew how they usually set things up. So we got things set up, I think about 90% of where they ended up ultimately. So it was good. It wasn't a bad thing, but those were questions that I couldn't build the team at the beginning. I had to sort of bootstrap, right? Like a startup company, and figure things out. And now I've gotten to a point where, okay, I actually have a business. It's actually generating some revenue, and I can hire people and buy software and do the things that are needed to sort of grow that business. But the first, 3 or 4 years of the business, it was not generating any revenue. I mean, it was revenue, but it was very sporadic and difficult. I wasn't making any money myself personally at all. And it took a while to get there.
Well, that's business. I mean, that's the thing, is a lot of people think that they're going to get started and it's just the money's going to roll in, and they have that vision, and but it's hard, and it's a grind, and it's in everything too. You may get lucky and get your first big deal, or make good money on that first property, whatever, but to keep going and rolling with it too, it's hard. And you're proven of that too, and everything you just said as well. And one thing you said, and you touched on too, is you love looking and strategizing and trying to find the next thing to enhance communities and your investors too. Let's talk about that, because you and I talked about this a little bit before the show. Times are changing. Interest rates are way higher than they were 2 years ago. Property values and cost are way up right now as well. And then you see the doom and gloom. You go on YouTube, the guys that were saying properties are through the roof and they're going to continue to climb now are saying, oh, it's doom and gloom, everything's going to crash this in 2023, and so now their roles have changed on that. And it's like, there's a lot of people right now is like, okay, I have money. Where should I put my money? Should I wait to put it in real estate? Should I hold on to the cash? Should I put it in stocks, or should I wait for that market to tank more? There's so much questions out in the economy right now, and you may not be able to answer this question because we all wish we had a crystal ball, but I got to ask it. So real estate today, what are you buying, if anything? Are you selling assets? What are you doing? What should people do with their money?
Yeah, Bill, I'm going to answer your question. I just want to let you know, it's been really interesting because over the past 3 or 4 months, that's been coming up a lot. Mm-hmm. I've actually been interviewed in the press quite a bit about this. I did a YouTube thing for there's a thing on my YouTube channel where I talk about sort of the things that you need to look at. And a lot of people are asking that question, what should I do with my money? Should I invest in real estate? Do I hold? There's people predicting doom and gloom. There's people saying this, saying that, right? I have, I think I take a pragmatic approach in what I do, but I have a little bit of a contrarian opinion compared to what I'm hearing a lot of these days, and I'll talk about all of that. So, the best time to invest in real estate was 10 years ago. Mm-hmm. The second best time to invest in real estate is now, and I've heard that from people before. That I think that's like a saying, right? I'm not sure where it comes from, but I think it is true that when you look historically over time, real estate is a fantastic investment, and over the long term, it has so far always gone up in value. Long term, I'm a believer that will continue. Real estate will at least keep up with inflation, but will probably exceed inflation in terms of long-term value when we're looking, much, much further down the road. So, is now a good time, right? That's what you're trying to do. You're trying to time the market. Okay. Any financial advisor will tell you, and I'm not saying that financial advisor is the greatest thing in the world. Some people like them, some people don't. If you talk to anybody in this, they'll say it's really, really hard to time the market. I mean, you got the best people in the business, right? These hedge funds and investment managers and stuff. They go to school for this. This is what they do full time, and they have a hard time timing the market, right? It's not about timing the market. It's about your time in the market. It's how long can you find something? Can you hold on to it long term? Well, let me just reference my book for one quick second. I tells you that book sort of tells my journey along the way. I share these there's 18 keystone concepts that I share in the book. And I just want to share with you guys keystone concept number 5, which is cash flow is king. And what that concept is really about, it's about a thing that my dad told me a long time ago. And I didn't really realize, felt the impact of it viscerally until the crash that we had, the real estate market crash that we had in 2008. But, he said, you never lose money in real estate if you never have to sell. And so in 2008, when we saw property values go way, way, way down, right? That's the Great Recession. That's when we saw, nationwide, 15 to 20%, maybe even more in certain market decline in the prices, right? But if you could hold on to that property during that time and make it through to the other side, which I was fortunate to be able to do on the property on the Upper West Side that I bought, then I was able to actually sell it and make money because I never had to sell it. I didn't have to sell it when I was low. So that cash flow is king, that concept, what it's talking about is if you're buying real estate investment and you have good positive cash flow, well, number one, that gives us that income stream, right? Like the Kiyosaki passive income stream, but also gives you a cushion so that you can ride out these inevitable dips that are going to happen. And I mean, it's a cycle, right? There's boom times and there's bust times. What we don't know is when those are going to happen or how long they're going to go for. Usually recessions in the United States since 1945 last about 10 months. But if you look at the last 14 decades, the US economy was in a recession 30% of the time. It's normal. Now, for us right now, we've been in since the 80s, since the 90s, we haven't really had that many recessions. And in the last 10 years, we've just been going up and up and up and up. So, and then the last recession that we had was a really bad one. I mean, they call it the Great Recession for a reason. Traditionally, during recessionary times, home values go down about 2 to 4%, right? So now what we're going through now, we're seeing a decline of more than 2 to 4%, but I don't know that we're going to see a decline of more than 20%. I think we're going to be somewhere in the middle there. I don't have a crystal ball, but that's what I think. There's still a ton of demand for real estate. I mean, I know a lot of your listeners are sort of in the construction world, and they all understand that there's a massive housing shortage. By 2035, there was a study done by the National Apartment Association and the National Multifamily Housing Council, and on the low end they were saying 2.6, and on the high end they were saying 4.8 million housing units that need to be created by 2035. So there's a demand. We need these housing units because of the demographics just in the country. There's a need for housing. So I don't see a massive, massive crash. And I don't even think we have a real estate crisis right now. I do think we have a liquidity crisis. I think that debt is coming back to normal levels. We've had this unbelievably low interest rates for a couple of years now. It started actually a little bit before COVID, and then COVID just made them go down. We were buying properties and locking in long-term debt at under 3%. That's ridiculous, right? That's not normal. And because the debt was so inexpensive, valuations were much higher. You could pay more for the property because your debt service was so low. Now that debt service is coming back to what I consider a normal range, like a historical norm of like 5 to 7%. That's normal. People are freaking out because you can't keep those same valuations that you had when the cost of capital was really, really, really low, right? The interest rates were so low. The debt, not necessarily the cost of capital, but the debt service on that, on the mortgages, right? That really low interest rate is just not available. And I don't know that we're ever going back to those low numbers. Now, maybe we will, but when I gaze into my super hazy crystal ball, I see 2023 as an environment, as a volatile year, where I think we're going to continue to see interest rates rise for first quarter, second quarter, maybe sometime in the second quarter to third quarter, they stop and they sort of plateau. And then if we look at historically, what usually happens is about 9 months after, we start to see the rates start to come down. Now, in the past, 4 of the past 5 tightening cycles, we've seen the rates come down quickly, right? The Fed's had to reverse course because we've gone into a recession. And so the question is like, what is going to happen? Like the Fed's trying to slow down the economy. We need to fight inflation, but do they overshoot or not? It's really hard for them to do. It's like almost impossible. You're shooting in the dark. They make a change. They make a policy change. They can't really see the effects of that in the economy until about 9 months after they do that. So it usually happens about 9 months after they stop raising the rates. They can start bringing them down. And I think that they will. I think rates are going to go pretty high, but I do think they'll come back down, but I don't see them going to like 3%. Like I think they'll end up like 5 to 6% probably in 2024 or so. I'm just guessing here. I have no way of actually knowing this, but that's historically when we look at the data. So Mark Twain is famous for having this quote where he says that history doesn't repeat itself, but it often rhymes. And I love that quote because that's how I've approached real estate since I've been involved, is looking historically at what has happened and saying, okay, historically, this is what happens. Here's where we are. So we're probably heading in this direction. Again, it's not going to be exact. It's not going to be a repeat of itself, but it's going to rhyme. It's going to look similar.
Yeah, and going off what you said, I think a lot of people, their memories are very short term these days, especially with social media and everything like that too. They forget how things were before. They forget how rates were in the past. They're just kind of glued to, well, I paid almost 2% or 3% on a rate. This is just insane, paying 6% or whatever. When at one point, I think the rates were at 20-something% at one point or something like that in the past, with credit.
Yeah, I think Volcker in the 80s had brought I think they were like I think you're right, like 14, 18, 20%, somewhere in the,
it was insane.
high teens. Yeah.
So the past, I mean, it's like the people tend to forget about how things, and you are right. I mean, history does repeat itself in a lot of ways too. And recessions are healthy resets to an economy that can't continue to climb because it helps things reset so people can't afford things again too. And I think people miss that whole thing. But I think with the doom and gloom and the social media and the YouTube these days too, it just makes things a lot worse, because everybody kind of does their videos for more clicks and stuff like that when it's not real. True, let's assess the situation like you did. I mean, what you did was went to past data. You went to how you kind of see things. You're by no means giving any advice to people, but you're seeing how trends were in the past. And that's kind of how you're, like you said, you're fogged up crystal ball. You're seeing things here in the future coming up. So, I don't see this big crash like you're talking about, right? And we do hear
hear a lot about that because of the demand that's there for real estate. I do think prices could continue to soften, right? But I just don't see this like massive, oh my gosh. And then everyone's saying, that there's going to be this massive buying opportunity. We're going to be able to buy keep all my money in cash because I'm going to be able to buy all these properties for pennies on the dollar in 2023. And, I heard that during COVID too, right? Everyone's like, oh, now COVID, everyone's going to get foreclosed. And there's going to be all these buying opportunities. I don't think that that's the case. There are so many. I really think this is all like super basic supply and demand, like economics 101, right? Supply and demand. There's a demand for housing in the United States. That's one thing. But on the other hand, there's all these investors who are waiting, who have this demand, who they want to buy these properties. So, okay, great. Let's say that somebody does have a property that they got on some sort of bridge loan, and now the bridge loan is becoming due, right? And they are not going to be able to hold on to the property anymore. They're going to lose their property. So they're going to try to sell it. They may even sell it at a loss because they need to get out of the deal. Great. How many people are going to be jumping on that deal? And when I want to get that deal, Bill, and you want to get that deal, and then I'm like, all right, well, I'll pay $100 more than Bill. And then you're like, well, I'll pay $100 more than Matt. You think of an auction, right? Think of an auction. And that same thing's going to happen in real estate. And I think that's going to keep there's so many investors and so many people who realize the value of real estate, specifically in multifamily, which I am very much involved in. Multifamily barely got hit in 2018, in 2008. And it barely got hit by the COVID. I mean, COVID did make people have problems with collections, right? Especially depending on the class of property. And there was problems in 2008 with multifamily with people who had debt coming due. And again, that was because of the debt markets freezing up. But the asset class itself was doing well. And a lot of people know that. It's not a secret. And a lot of people really like that. And that's why it's gotten bid up so high lately. So I don't think that maybe multifamily properties are going to be trading where they were at the beginning of 2022, because those were insane prices. But I also don't see this, treasure trove of incredible, pennies on the dollar kind of deals, because there's too much interest and too much demand in it. It's going to have to be less, because they have to make the new debt service payments work with the higher interest rates. So that'll be taken into account, but I don't think there's going to be these ridiculous deals that people are predicting.
Love it. Yeah. I mean, great information right there too. And I 100% agree with you too, just because I get it from the construction angle too. I get asked all the time, do you see costs going down with construction material? And I say no, just because there's so much demand, especially where we're at in Florida here. And after a hurricane hits too, then it's like people are questioning why the drywall costs have gone up. Well, when houses get flooded, drywall goes on demand, labor goes on demand because people need to get it replaced. So those manufacturers make more money, and they charge more too because they can. It's an unfortunate thing, but that's what's happening. My drywall guy just came up to me and he goes, Bill, I got to raise my costs. I got to pay my guys more because they're threatening to leave me because there's so much work out there, on top of material costs have skyrocketed too because there's a lot of work. So that kind of thing.
But happening. The material costs also do go up because of inflation. So the raw materials they need to make the drywall, and the people who work for the drywall company they're experiencing inflation. They got to buy groceries for their families. So they're demanding more money, just like the workers are.
Fuel cost.
It does go up. And also when I think you have a crisis like a hurricane type of situation, they've got to make more drywall and make it quickly, which may require the manufacturer to, and I'm not like a big fan of like drywall manufacturers. I'm not invested in any drywall business. I'm just saying, they may have teams working around the clock to keep up with the demand, and they may need to pay people overtime or hire more employees or whatever. So there are costs that are legit involved when there's a large supply of something needed in a short period of time.
Exactly. Matt, before we go, just to wrap this up too, I always like to go personal questions with my guests. So one question I love
Cool.
asking is, what about you personally? What lessons have you learned throughout your journey that we should all apply to our own business or own lives that can help us grow?
Well, I could write a whole book about it, and I actually did.
And you did. Yeah.
But let's just talk about the subtitle I have for the book, because I think it's important there. Produce passive income, write your own story, and direct your dollars towards positive change.
Hmm.
That's what I've learned along the way. I am producing passive income so I can write my own story, whatever my story is, right? Like whatever that is, whatever you're into. I really love the arts. I really love theater. So I'm directing my dollars towards positive change, not only within the apartment communities that I own and that I invest in, and we make those communities better. But also I direct some of my dollars into charitable things and into the theater. That's something I'm passionate about. I got a friend who does the same kind of thing. His real estate syndicator is really passionate about animals, and he donates time and money to animal causes. So I think, whatever it is that your passion is, like whatever your own story is, passive income can help you do that. And I hope that people will direct that money, that freedom, that time that they get back into things that are positive for the world, whatever that passion of theirs is.
I love that. I always get a great answer on that question. So another great answer. Another question though that I like to ask too, and I love this one,
Yeah.
is everybody talks about your past. Let's hear about your future. Where will we see Matt in 10, 15, 20 years from now?
I don't know. I might be hanging out in space with Jeff Bezos, and no, I don't necessarily. I love space, but I don't necessarily want to go up into space. I don't know. I have no idea where I'm going to be 10, 15 years from now. I know I'll be spending time with my family. I know I'll be hanging out with. I have two wonderful girls. I know I'll remain married to my wife. I think we will be involved in the arts to some extent. And I also think I'll be involved in real estate to some extent as well, though I think it'll be even more on the passive side, But there will be projects that I want to do that I'll continue doing. And for me, the litmus test for those projects is what kind of impact can we make on a community? How can we enhance lives for the residents of that community? And also, it's not a charity, right? So how can we also enhance the lives for our investors? How can we be profitable and do well by doing good?
Yeah, I love that. And that's what it should be all about, is enhancing the lives of the community, building communities, and also obviously you're helping investors as well too. So love what you're doing, man. This has been great. Last question, what this show is all about. What exactly do people need to look for when investing in real estate, and why should they choose Matt as their go-to coach, mentor, investment partner of choice, and book to read too?
Well, yeah, I mean, listen, I would say go to my website and download the free guide. It's like right there on the homepage, because it will help you know some of the questions to ask, and then there's even more questions to ask if you buy the book. But that download is free. It really comes down to who. Like, I think the most important thing is like who's running the deal and who you're partnering with. Know those people, build those relationships. That's the most key ingredient to success in real estate, but also in life. I think is about building those relationships, getting to know people, finding those like-minded individuals, the people who share the same values that you do. That's the most important. So listen, if you feel like I'm a good fit for you, the listener or watcher of this podcast, and you want to talk, you want to connect, go to my website. Cool. We can connect and talk. But I would encourage you to go to the website to download the free guide. I have a blog where I write tons of educational material There's like a newsletter you can sign up for that where I just send you that stuff every month. So it's good learning, I think, for real estate that might expand your viewpoint a little bit. So yeah.
Awesome, man. Matt, this has been great. I really appreciate the time. Like I said, I've had a lot of investors on. I always get something different from everybody. So you've done awesome today too. Where can people find and connect with you before we go?
Oh yeah. So on the website, it's picheny.com. I'm sure you'll put it in the show notes, yep. But I'll just spell it real quick if they're listening. It's PICHENY.com.
Awesome. Matt, I appreciate it today. This has been awesome. Thank you for coming on.
Hey, Bill. Thanks for having me. Really great questions. I enjoyed our time today.
Awesome. Yeah, I appreciate your time today too. And everybody that's listening, you all know the routine. Please share this, like it, comment, 5-star review, not 4 stars, because all we accept is 5 stars on iTunes. And we appreciate you all. Love y'all. And I will see you guys on the next episode.